For more, let's bring in Bleakley Advisory's Peter Boockvar. Peter, thank you so much for joining us here. Really appreciate you being here with us on a very, very active day for markets, of course, as well as for the world and our political landscape. What do you think investors should be positioned right now, as we sit, where we have no idea what the outcome will be? Will it be a sweep? Will it be clearly one candidate or another in the White House? What are you advising?
Well, policy-wise, if there's a split Congress, the Fed meeting on Thursday is going to be more relevant than who's the next president.
Even though we're pretty sure they're cutting rates, and you still think
yes, but I think the bond market has been the most interesting thing to watch since the Fed last met in September, when the 10-year is up 70 basis points since they met. Now, if you're a responsible central banker, you have to ask yourself, okay.
Hold on a second. Is there such a word?
It's an oxymoron. I agree. Okay, interest rates have gone straight up since I cut rates. Gold's at an all-time record high. Credit spreads are extraordinarily tight. Inflation prints have been a little bit above expectations if you look at the last CPI. Jobs data is very confusing. I think you got to look in the mirror and say, do we really need to cut? And if I do cut, maybe I pull back the expectations for December. So I think we really need to see this bond market action here. And getting back to whoever's going to win, regardless of who wins, debts and deficits in the U.S. are going to continue to go higher. Mm-hmm. Spending at 23% of GDP is not going to stop. And whether we raise taxes, lower taxes, or whatever, it usually hovers around 17% of GDP. So I think that the bond market is sort of taking control in a sense of the narrative.
Okay.
And I think we need to pay attention to that.
Okay. But regardless of who wins, I mean, they don't control the Fed, right? The Fed is independent. So why does that message change, back to your earlier point?
Well, I think from an investing standpoint, we're obviously focused on who's going to win. But I think where interest rates go, where earnings go, is going to matter much more. In terms of policy, whoever wins, the most important thing is what happens to the Trump tax cuts next year. Outside of that, I can't think of anything that is as important. Yes, the tariffs matter, but both sides kind of like tariffs. I'm not a fan of them, but they're there. But again, legislatively, it's what happens to those expiring tax cuts.
Peter, in the notes it says the equity market will care about yields, but not until 6%, which makes me believe you think there's a more than remote possibility that 10-year yields go to 6%. So how do we get there?
Well, it'll be Washington, D.C. that will only care if it gets there. Because everyone says, well, either candidate's not talking about deficits. When will it matter? When will it matter? And that 6% is when I throw out where you can be sure on the floor of the Senate or the House, people are going to say, oh, boy, we need to start paying attention to this. Because that's the sort of the crisis level. Now, whether it gets there, I'm not sure. I do think, though, we retest 5%, which was the high of last year. And this 430 level is really key in the 10-year because it's the 50% retracement of that 5% on the upside, the 360 that we saw a few weeks ago. So this 430 really matters.
Peter, thank you very much for being here with us. Peter Boockvar of Bleakley Financial Group CIO and CNBC contributor, we should add.